Hey, Matthew. Just to
How's it
let you know,
going?
we just went live. So we're going to wait
Awesome.
here for around 5 minutes to let people come in, but we are currently live on Facebook, YouTube, Twitter, X, and LinkedIn.
I
Nice.
love it. So
So to
excited.
all of you that are just joining us here, welcome to the Alternative Investing Club. I see we've got about 3 dozen people that have joined us online so far. But we're going to wait just about 5 minutes like we usually do to get the quorum in here and get the number that we normally have before we start. Just to let you know, I am excited about today. This is going to be a very different, very interesting topic, in my opinion. And I'll say a few more things about that in just a moment as we're letting people join. While people are joining, though, if you have a topic that you want to hear about or a speaker that you want to hear from, please put that in the chat. And I always loved being able to talk to people when we were using Zoom back and forth, and I can't do that anymore with this particular video platform. So please show me that you're there by putting something in the comments. Tell me where you're coming from, or hey, if you just made an investment, you know, you don't have to tell me what it is, but put something like I invested, or just let me know that that you'd enjoy the club. Hello, Cynthia. I feel like Romper Room. Is that dating me? Hello, Glenn. I see you.
Yeah.
Glenn, I know you actually already signed up. Well, maybe I shouldn't. You signed up for our free capital raising course that we're doing in March, and I'll make that as an announcement here in just a moment. I'm actually partnering with Lauren Bercherel, who was previously at Spartan Capital. She's raised 55 million. I've raised about 18 million, and we're basically just going to be giving a 4-week course, 1 hour per week, where we go through 506B and 506C fundraising and talk about how to go from your zero to your first million. So if you're interested in putting together an Airbnb partnership and bringing in passive investors, or finding a property, a gas station, a strip mall, a multifamily property, either large or small, and you want to structure it so that you've got limited partners they bring the money, you bring the experience. Join us. It's going to be free. It's starting March 6th. I will share my screen here in order to show you where to go. Actually, first I'm going to drop into the chat. Here's where it is, capitalraiseschool.com. And Katherine, make sure you start sharing your screen when it comes time to put your slides up.
Okay.
So here's the web page. It's a 4-week course featuring the two of us. And if you want to see Lauren, she's also been a speaker at this club as well. So you can go back and look at that. We're continuing to wait here. Hello, Fang. Hello, Prolette. I see you. If you're new and you've just joined us, please put into the meeting where you're joining us from. Hello, Paul. And we're going to get started in just a moment. I'm curious, for those of you that are still at Intel, I've seen a dip in the number of people coming to my meetings recently. We used to get 100 people pretty easily now, and we're down around 60 to 70. So I was just wondering if there was anything over at the Intel side that has happened or changed that I should know about and might explain the dip. I know it goes up and down all the time, but hello, Tatiana. Portland, hey, that's a good city. Keisha. We've been busy, Sai. Does that mean Intel has been busy? Hey, Peter, you might be the first person I know of from Missouri. I'm pretty sure Intel doesn't have a plant there, so welcome to the group. For those of you who don't know, this club originally started as an employee resource organization, or a club, at Intel Corporation. And we are no longer a part of Intel Corporation. We're an independent entity. We rebranded ourselves from the Intel Real Estate Education Club to the Alternative Investing Club. And we bring great speakers in like Matt and Katherine every Friday. All right, so I'm going to start in here really quickly. This is Capital Raise School. If you want to learn how to raise your first million, come and join us here. We're going to be going over legal. We're going to be going over marketing and social media. We're going to be going over AI and automations that you can use. And we're going to be going over putting it all together and automating. And the fourth session will be an open question and answer session. So join us here if you want to do that. There's a little sign up form at the very bottom. And we will be sending out emails about it soon. With that, looks like we're starting to get up to the quorum space. I'm going to say I am really excited about today because this passive investing opportunity is completely different than anything we have seen before. And we've talked a lot about commercial properties. We've talked about oil and gas. We've even had a person who came in who had a fund buying, expensive barrels of whiskey and bottles of wine and reselling them at triple the price in order to create his investor return. So we've had some interesting things here. This is one that I'm very bullish about, and I'm introducing these two speakers as club fund speakers. As you know, there's three ways that we bring people into this club. The first is a purely educational talk where no sales pitch is given. The second is a pitch where they will come in, they present a particular opportunity to the group, and then I leave it to the group to contact them. Those pitches do not go through the Alternative Investing Club. We are not in any way a part of the transaction other than just giving them a forum to speak. And the third way is when the Alternative Investing Club is a part of the transaction. So as club fund speakers, Katherine and Matthew, at the end of this, will point you towards alternativeinvestingclub.com/fund and probably some other resources as well. But we will be sending out a capital call or a call for capital after this talk. And any money that comes into the Alternative Investing Club Fund, which is a fund for the speakers that have been featured as club fund speakers before in the past, any money that comes into that will be earmarked for the fund that they're going to present. And just a really quick update. I'm going to start formalizing the updates on the fund very soon here. But right now, we're 73% invested in DLP capital. The rest of it's invested in 30-day T-bills. It's a very liquid fund at the moment, which means that we have cash on hand in the fund to deploy into situations like Matthew and Katherine's and other people that we have had here. So if you're interested in getting into the fund now, this is going to be our first investment that has a longer term hold. And I'm excited about it for a number of reasons, but I think these two know the subject way better than I do, even though I've been reading a lot about it. So I will hand it over to you guys. Welcome to the Alternative Investing Club.
I love it. Well, thank you for having us here. We're super excited. And I'm sure, if everybody's just like you, again, birds of a feather flock together. So we're just really excited to be with investors that are really about, we believe we can do good and do well at the same time. So that's what we're here to show you is exactly how we've done that.
I forgot to say one thing.
Yeah.
When the Alternative Investing Club brings speakers in here, we are not a registered investment advisor. We do not recommend or not recommend particular speakers. The interactions are completely between you and them, unless they're a club fund speaker, in which case our club is going to be investing with them and you can be a part of that. So I just want to make sure that everyone knows we are not registered investment advisors. We are investors.
I love that.
The important stuff,
Need to cover all the legal things. So can they see my screen?
Yes.
There we go. Okay, beautiful. So we're going to go ahead and dive in to all of the fun that we're talking about. So this is the investment overview. Matt, do you want to cover this really quick and then we'll jump into our introductions?
Yeah, not a problem at all. Definitely understand. To get a good understanding of it in a nutshell up front, right now we are lending capital to a company that basically helps people invalidate their credit card debt and wipe it off their books so they don't owe it anymore through the legal process. And as we lend that money to them, they're actually signing up for legal services and contract services that then we collateralize against. And we're typically lending at 25% of what that collateral amount is. And we're able to pay our investors a 20% annualized return on investment, paid on a quarterly basis, and all backed by these receivables as well. So we have a good amount of collateral being at 25% of what they're worth over these giant pools of receivables. So, and it's a 36-month fund, interest-only fund, where you get interest-only quarterly payments. So if you invest $100,000 and you're making $20,000 a year divided by 4, that's $5,000 a quarter coming in for a 36-month term, all backed by these receivables. So it's an interesting concept to do. There's an 80% plus collection ratio on these receivables, which makes it and interesting from hitting my debt service or my debt tolerance. My I'll say risk tolerance levels were mitigated in my mind from some of the collateral involved. So, but I'll let Katherine kind of talk about I'll say the heart behind what we're doing,
Yeah.
which is really the most important part of this as a whole as well. So when you guys understand what we're trying to do for people, it's exciting.
So here's what I love about this. I always say to my twins, listen, nerds rule the world. That's the reality. Matt is one of my favorite nerds on the planet. So he's a CPA and he just said some really amazing, smart things. And I'm going to put it in like layman's terms. And so here's what I love this is that I've been investing for well over 30 years. And at the end of the day, I personally love two things. I like to be the bank and I like to rent dirt. So being the bank is the most secure position to hold in any investing transaction. And that's exactly what this is. So what this is doing, there's two pieces to this, is for our investors, it's paying out our investors 20% annualized for 36 months. That's the basics of it. The impact is that at the end of the day, this is helping around 33,000 first responders and veterans families. It's helping them get out of debt, stay out of debt, and bring them financial literacy. That's the actual impact. So our investors, we add fabulous comments to their bank accounts, but at the same time, they know that they're literally helping 33,000 families, which is really extraordinary. So that's like the understanding like what that is. So we'll dig into, all of this. So Matt, I would love for you to share who you are as a brilliant man.
No problem. And it's perfect because, you being able to share the social impact and me breaking down the math and the numbers is a perfect combination to explain this thing. And I'm a CPA. I quit my CPA firm job in 2006 to go into real estate full time. So I was a real estate genius for about a year and a half before I got punched in the face, of course. Since then, we flipped over 1,000 houses now. We've actually raised over $150 million. I have over 35 million now lent out to flippers in different markets. And we do all types of real estate, from mobile home parks to self-storage to lending on real estate, a ton of different strategies, that we come out with consistently. And it's a lot more fun than doing taxes, but that's my story. So
Right. I love it. So my name is Katherine Bell. I am a 3-time international best-selling author. And I really focus on, here's what I love. I focus on teaching women how to invest and create multiple streams of passive income. The average millionaire has 7 streams of passive income. And the reason that matters to me is that I had created 13 streams of passive income for my family when my husband had died tragically. And so I'm very clear that families absolutely need to have this built into their system. And, having that gives you the breathing room. Money is like oxygen. The more you have, the easier it is to breathe. And the more you have and you can breathe, the bigger the difference you can make. And so everything is built around that. And Matt also has, it's a podcast for dads, right? So I feel like between the two of us, like capturing both sides of the family, which is really important, makes a huge difference. So that it's just our philosophies just fit really, really well together. I've been investing for over 30 years. I think my favorite program I ever ran was Flipping Females. So I partnered with women, teaching them how to invest, and we flipped about 500 properties here in Arizona. And I've done all the things, but being the bank, renting the dirt, those are the fun things. And then, of course, we have, more team members behind us who are really extraordinary and do an amazing job supporting our entire team and all of our investors. And then, of course, like Daniel, all our fund managers that, come alongside of us and are here to make that impact as well. So the key points, this is the I think the simpler version, because Matt, you're so smart. So it comes down to 36 months is the hold. It's a minimum of $50,000, 20% annualized returns, and it's paid out quarterly. That's what it comes down to. So the basic numbers is it's a $50 million fund. And that $50 million fund is buying $200 million of debt. And then we work with the families to be able to collect that and make that work. And we'll talk about why this is so successful in just a moment. So Matt, do you want to talk about this?
Yeah, absolutely. So what's really cool about this is most people that are in credit card debt or any kind of debt, a lot of them actually have this problem because of medical issues or things that happen in family and life where they get into a tough spot. Yes, there are some spenders and things like that out there. It's a very big predatory industry as a whole, though. And what's actually happening is when people are stuck, when they have $20,000, $30,000 of credit card debt and $1,000 minimum payments, and they can't make those payments anymore, and they're struggling, especially with the amount of inflation that's happened recently and everything. It's a big challenge, and financial education and that budgeting is not taught in schools, and it's a big challenge with society as a whole. But when they're in that position and they're able to go, their options are bankruptcy or going to a debt consolidation company, which makes them make a giant payment every month. There's still a high interest rate and the balances are not reduced at all, but it's a giant payment. Most of the time they can't afford that option, right? Or they have the option of being able to go through and doing a haircut on that debt, and that stays on their credit for like 7 years, just like a bankruptcy does, and it hurts them long term. The debt invalidation option is wherein the collection companies come in and they try to collect and they don't abide by the Fair Credit Practices Act and a lot of other legalities and legal laws involved with regard to collections. And so what happens is that opens up the door for attorneys to wipe that debt off their books where they do not owe it anymore. They're able to analyze those accounts up front and be able to wipe that off as a service for those clients. And typically you're taking somebody from $20,000 plus in debt with $1,000 minimum payments down to a $6,000 average receivable balance from the attorneys and the contract services, down to a $300 total monthly payment with no interest, fully paid off in 24 months. So at the end of 24 months, all their debts are invalidated through the legal process, and they know which ones up front they're able to do that on. And their debt is cleared. All that stuff is off of their credit report, and they have a clean credit report, and they're out of debt, versus those other options of bankruptcy or haircuts on the debt, which stays on their credit for years. And so this is huge from a collectability standpoint. There's like an 80% collection ratio on this debt historically, and there's a major incentive for them to continue to pay because they need those services, and they're putting them in such a better spot. And of course, they're analyzing their financial situation up front to make sure that they can afford those payments and those contract services, of course, as well. So it's really cool to take somebody from this really horrible position where they're kind of drowning in debt to a much better position of being able to be completely wiped out of debt, where their credit is cleaned up and everything as well from this, which is super exciting. And, we have a story about one of our clients that did this, that was a military member and had $75,000 of the debt, was able to get it down to $13,000 and a much more affordable payment on a program to do that, where he's going to be able to get out of that. And then our goal is to create that financial education afterwards to really like ramp that up, to be able to help them like stay out of debt and be on the right track going forward, which is really a cool thing that I think is a major lacking thing in our society as a whole as well. So sorry to go off, Katherine. I hit up the hard side.
No, this is great.
This is what I'm passionate about.
Yeah, and that's exactly the point. Like, I hope that you're understanding like why this is so successful and the breathing room that we're giving these families and why they're extremely grateful for what we're doing. And then you as an investor, I mean, you get to sleep at night knowing that commas are being added to your bank account, but you really are making a true impact in these families, right? So this is the fun part.
Yes. So what happens here is we are OCG Debt Invalidation Fund 2. And what's happening is Resolution Partners goes and contracts with attorneys and sets up the whole system here to be able, with marketing partners as well, to bring in the clients, the people that need these services. Those marketing partners make $1,500 a pop after that client's made at least 2 payments. So they go find the clients for Resolution Partners. Resolution Partners analyzes their entire situation with regard to all their debts and sees which specific things can be invalidated because the collection companies didn't do their job right or didn't abide by the law, right? And then they sign those clients up for services, and we fund the funds to the marketing partners and we're secured by these receivables. They signed up for these receivables. We don't get that contract assigned to us until they made at least 2 payments on the account to protect us, just like the marketing partners don't get paid until they made at least 2 payments on their account. And that client is now signed up for services, and the attorneys immediately send out cease and desist letters to those creditors to say, please contact us now. We are now representing this client. My client doesn't owe you this debt. And they start going through that process, which takes 12 to 24 months to do that process. In the meantime, that client is typically paying an average of a $300 total payment. $50 goes to the attorneys for their work involved, and $250 goes to Resolution Partners for the entire system involved and running the business. And so that payment comes back to us. And so I think we have an example as well about how that breaks down on scale, because on average, we're looking at around a $6,000 receivable for a cost of about $1,500. So if you're talking about $5 million, that's 3,000 receivables worth $20 million. If you're talking about our $50 million fund, that's $200 million worth of receivables. So it's really interesting when you look at that collateral to value, and just on $5 million, it creates $833,000 a month of revenue coming in, where the debt on that $5 million would only be about $83,000 a month. So it's a really good structure there where the rest of the funds can be reinvested into more contracts, which then increases our collateral even further, which is super cool from that perspective, from a safety perspective in my eyes.
Right. So this is the always the CPA overview.
Yes. It's my Excel sheet right there. That's what it is.
So yeah, so we went over all of this, and again, all of this you go through Alternative Investing Club for all of that. We can get those answered. So this is a deeper dive into the process that you just went through. So I don't know if you want to cover any more of this.
Yeah. So this is basically the exact process I just outlined, where you find the customer that's 20 grand in credit card debt. You have the marketing partners are out there finding these clients and doing marketing services for this, where they're doing pay-by-click marketing and putting the labor in for this piece. And then they go through and they check to make sure that they can actually qualify for this. They're able to invalidate, 40 to 50% of the total debt on average, because some of these companies are abiding by the law. So they're able to get rid of a massive chunk of their debt here. Many times we've even seen up to the 90% range. We're just kind of being conservative in this range. And they're set up for make 24 monthly payments at $250 a pop on average, with an 80% average collection ratio on that debt. And we verified the collection ratios. We did audits on all the contracts, where we actually came in and reviewed a bunch of different contracts and did samplings of these contracts, saw the money coming into the bank account and all that kind of stuff as well, to verify, all of this is occurring. So I'm trying to put on my auditor days. It wasn't a full legal audit, but that's what I did in this case. So
Matt, I think it's really important to go over what's the benefit to the consumer at the end that we're doing this for? Why would they stay inside of our program instead of just saying, whatever, I'll go back and do this?
Yeah, so they're getting put in a position where their debt is wiped off their books for every account that they sign up for this. So they're extremely incentivized to wipe that out, and then it cleans up their credit and it wipes it off of their credit as if it did not exist in the first place. And so it's extremely beneficial for them to change their entire financial situation and not have to declare bankruptcy and go through that whole mess, which stops them from being able to rent properties or get any debt in the future or anything like that as well. And puts them in a much harsher position to climb out of that, right? So that's really the biggest benefit. And so they have a huge incentive where if they don't make payments on those accounts, then the attorneys stop their legal services and their debt is not invalidated, right? So and so that
Go right
typically,
back where they started.
right, and so that's a huge incentive for that performance and as well. So when we're looking at this on a $5 million investment, just as an example, because 50 million seems crazy, you're talking about $20 million worth of that debt that's there. So really big collateral difference between those. So that's $16 million historically collectible at 80%, right? So
it's pretty incredible. So you want to talk about we just went over the risk mitigation.
right.
I always love this. You want to talk about this?
Yeah. So what's happening is, every quarter you're getting a 5% return on your capital that equals 20% annualized. So, over 12 quarters, which is 3 years, you're making basically 160% on your funds, or 60% total, 20% per year, right, on your funds. And so we give an example of the $100,000 investment into this type of structure, so you guys can see what that looks like from a quarterly basis coming in. So. And it starts in immediately, right away as well, which is pretty cool. Like within 10 days, your interest starts to accrue.
Yeah. So then here's an example. You want to talk about, that this isn't your first rodeo?
Yeah. So what's happened here is when we first invested in this, I first put in $250,000 of our funds, or my personal funds, saw this through fruition. I've been working with these guys for a little bit over 3 years now, with the borrowers on this. They were introduced to me by a really good friend of mine that has significant experience in the space and has known them for a really long time. And we did background checks and criminal checks, and we checked all the things that they've done. They've done over 70,000 accounts in the past. And I visited their offices multiple times in that due diligence process, where they're like 30 minutes away from me in Irvine, California. So I've been there multiple times, and I've seen the data, just like where you're seeing right here, where all the contracts are lined out, and we're getting UCC filings against these contracts so that we have a legal lien against those assets. So if something ever happens, we actually have the ability to take over these contracts and start collecting ourselves as our collateral involved in that process. And so what you're seeing now is an example of an accounts receivable pool. We're talking about thousands of these that look just like this, that have a customer ID. We've actually been in their portal, in their entire CRM, seeing all the documents and doing samplings of those documents to verify those contracts are all there, and that we're seeing the monthly payments of those contracts coming into the bank accounts as well. And so this is just an example of the average contracts and things like that we've seen in the past.
It's incredible. So here's the summary of it. Again, it's this really is doing good and doing well at the same time. Being able to help 33,000 families in a very, very real way, have that breathing room. But then on the other side, bring financial literacy. Financial literacy is the unfair advantage. All of clearly you've been able to have the financial literacy through your journey of investing. And that's exactly what we're, helping them do. These are first responders, like people that are putting their lives on the line for us every single day. And, we know financial literacy doesn't come through the school system or anything like that. So this is our opportunity to make sure that we bring that to them and make the difference for those families in a very, very real, tangible way. And then, of course, at the same time, being able to pay our investors 20%. That's pretty amazing. And people are like, how are you able to do that? How are you able to pay 20%? Because here we call this a clue. Okay. So being the bank is the most secure position to hold in any investing transaction. If you look at the skyline of any major city, the names on the top of all those buildings are banks, right? And so this is your opportunity to actually be the bank. It's one of my favorite things to do. So yeah, it's 36 months. And then the way to go about this obviously is to make sure that you go directly to Daniel and the Alternative Investing Club. That's who we're doing this with, which I feel extremely honored and privileged to be working with Daniel. He's an extraordinary human being, which I'm sure all of you already know, and gets the power of making an impact and, obviously doing good and doing well at the same time. So Daniel, I don't know, do we have any questions? I don't know how this works.
We have a ton of questions.
Okay.
And yeah, I mean, it works any way you want it to, in order to, communicate the best to the people that are here. So we
Yeah.
can, actually, the only thing that they have come to me and said is that they want the speakers to have a slide deck. So that's the only requirement, really. And we have some interesting discussion going on in the chat as well. Some general questions, but also discussions around people who have acted fraudulently in this area in the past. And so we're gonna definitely address that head on. But let me start at the top of the question deck. Some of the questions were answered as you went along, so I'm trying to go through those. Alan is asking, I assume the capital is returned at the end of 36 months.
Yes, correct. And they right now on about $12 million worth of capital raised, we have about $62 million worth of contracts in place. So, and that's what we're happening right now as far as that happens. So it's not difficult to be able to go and do that. And about $3 million of Fund One's been already returned as well. So of capital.
I should also mention here that going through the Alternative Investing Club Fund, our minimum is $25,000, and our hold period is actually also 3 years. And so this lines up very nicely in that we will have liquidity coming in at about the 3-year point from this particular holding in the fund that will be able to make the fund liquid for those of you who want to be liquid at that point or want to sell at that point. So there's a good alignment there. All right, next. Fang Wang is asking, what part of the debt is invalidated?
So the credit card debt is actually invalidated. So what happens is they're able to wipe that debt off of their books through that debt resolution process, so that invalidation process of this. So.
All right. Glenn is asking, what are the typical legal and administrative services a first responder needs after this action has occurred? Or is this a labeled way to get the payments?
So as far as the first responders go, what we have set up is we've set up QR codes where we're marketing for, significant, anybody who has that needs that help from the military, from first responders and police officers, firefighters, all that kind of stuff is basically tracked. And we're trying to promote that massively to be able to help with this process. They do invalidate other customers as well. But at the same time, we have these discount programs set up specifically for these first responders to help them. And we're tracking that and being able to help them, more than most because of that process. They don't have to pay for marketing services. They're able to get very big discounts on the services.
All right. Now we're getting into some of the discussion about people in this industry that have been shady actors. So Ashish is asking, go ahead.
Yeah, so I was reading the comments and appreciate those comments actually. So it allows me to tell the story about what occurred here. So right in the middle of when I met Russ and resolution processing, I was watching a big fiasco occur where there was an attorney named Tony Schwab that was doing the collections and the workload for all of the actual all of the funds that were involved in this process. There was a lot of money that was raised previously for another fund similar to this, and there was actually multiple funds that were created that were utilized for these receivables, and multiple service providers that were doing it. And what occurred was this guy, Tony Schwab, the attorney that was doing all the work, who was collecting all the payments, just stopped making payments to all of the funds. And so all of the funds sued Tony. Tony went and declared bankruptcy. The trustee took over all the accounts and the business from the attorney so that investors could get their, try to get their funds back out of that process. And the attorney was causing all these major issues, of course. And there's stories about this. The guy's, I believe, in jail now. There's, all kinds of, court documents about this attorney, this fraudulent attorney that's disbarred now as well, right? And so then they went through and all the investors got together and, continued to sue. The bankruptcy trustee stepped in and had all the accounts. All the other investors that were investing wanted Russ to take over those accounts and start servicing those accounts on behalf of the trustee, which is what occurred. And then later on, Russ bought out those contracts from the bankruptcy trustee. And they actually went through an audit with the bankruptcy trustee as well, where they gave him flying colors. I was seeing all of this occur and watching it real time occur, and actually seeing the audit reports and things like that, and showing that they were passing those audits. They were, from the trustee the whole time, and saw what occurred. And so after seeing all that and being able to invest my capital first with them to see that process through all the way, that's when we started to go through and raise for them after I saw that process occur and saw that the trust that the other investors had in Russ as an attorney, Russ as a service provider to come in and do the servicing of these accounts. That's what actually occurred. I know there's a lot of speculation out there, and definitely there's some other people. There's a guy named David Zook that was involved. Reach out and talk with them and see how they feel about Russ, because Russ came in and, in my opinion, basically saved the day with regard to this and helped them significantly through that process. So there's articles out there. I have the backup for all of the articles and everything that occurred, including the audit and all that stuff. I made sure I reviewed all of that stuff and knew exactly what occurred. And by seeing those things happen, it's what gave me the trust for Russ that he was on the up and up in this kind of pretty amazing business that it can be run, so.
All right. That answers quite a few of the questions that are in here.
Yeah, no problem.
So Resolution Partners, I guess, was created by Russ, and that's the group you're talking about here?
Yes, correct. That was the previous fund he had, where that attorney basically, stole a bunch of funds. Yeah.
Okay. What sort of due diligence can a person getting into a fund like this do to make sure they're not in a situation like that, or they have reputable people in place that can protect them legally if a situation like that occurs?
Yeah. So at the end of the day, what they can do is they can go through and verify the accounts like we did, verify the actual contracts that are going through, and look at the bank transactions that are occurring and see the daily reports that are happening, and that's what I did across the board. So absolutely. Okay.
William is asking, if the consumer is having trouble making their monthly payments, how can they afford the $1,500 payment? Does the program allow them to get around this?
So right, usually what's happening is they're actually making a much larger payment on their credit cards than they do with the receivable in the first place. Their payment drops by over 75% typically on these accounts when they're going through and doing this collection. So it's the opposite of what you're thinking. Their actual payment drops under this program massively. And they're also looking at their debt to income ratios and things like that when they're signing them up for these programs to make sure that they can afford those payments.
All right. Next we have Jake. And just to say, there is more discussion here. First of all, I put onto the screen here, if you want us to follow up with you about this investment opportunity, go to the alternativeinvestingclub.com/fund page, and it's right there up in the top menu right here, /fund. And this is just a web form, and it will allow us to follow up with you on it. Jake's question is, if this investment is through a rollover IRA or a Roth, is there a UBIT blocker strategy?
So in that situation, there could be a blocker strategy in place. You can treat this as interest or as ordinary income, depending on the situation. And so there's no loans happening here, as far as we're not leveraging the investment. We are lending the money secured against these receivables. So at the end of the day, you want to talk to your CPA about this. You could have UBIT if it's considered ordinary income, which is the way we try to utilize this strategy. So because a lot of real estate investors, if it's passive ordinary income, then they can take large tax deductions against that income via cost segregation studies as well. So it's a big benefit from that side. But you want to talk to your CPA about the UBIT stuff specifically for this strategy if it's considered passive ordinary income.
All right. And I just put into the chat, are there any more questions? Not realizing I was on my tab where it was only showing me the ones that I had marked already. We have a ton of questions. So next I'm going to go to Fang Wang, who wants to know, can we get a copy of the slide deck?
Yeah, sure. No problem.
Okay. She also asks, where are all the debtors? All over the U? I assume she means US.
Yes, all over the US.
So, and this is US only based program,
yeah,
right?
Correct.
Okay.
And they're in specific markets where we have attorneys and all that kind of stuff. They set up attorneys in those markets for those states as well. So they have a network of attorneys they work with.
Okay. Peter DeLuca is mentioning that investors should follow up and ask Dave, Zook, and McKenna what is going on with the situation. So
I highly recommend go call David Zook. Absolutely do that for sure and understand the situation. He was not hoodwinked by Russ. It was the attorney that basically was running all of the accounts that was doing that at the end of the day. So, and he was caught, and of course his business was taken over by the bankruptcy trustee for him, and he's now disbarred. So but yeah, I understand how you could feel that way for sure if you're not seeing like what I saw in real time. But I appreciate that, and I have no problem actually if you guys want to talk about this in more depth, as well. We can talk about it all day. I'm an open book with this stuff for sure. So,
Fang is asking, what is the timeline of investing?
So it's 36 months is the expectation.
Yeah, and I think from the starting point, the Alternative Investing Club Fund is currently open and active. People can invest now. We put the money initially into DLP Capital and to 30-day Treasury bills because DLP Capital has a 90-day liquidity, a 90-day period whereby you can make the fund liquid again. So within 3 months, if we find something that we want to take that money in and put it into a better investment, such as a longer term syndication or a debt validation or an oil well or something that actually holds your capital long term, we liquidate the DLP in the 30-day T-bills and move it into that. So the fund is open right now. Their fund is open right now. So as soon as we raise the capital, we will put it directly over there, and then that starts the 3-year period. Was there anything you wanted to add to that?
So yeah, it's a 3-year period from the date that you fund that investment. So that way it's a staggered payoff as well over a period of time based on those contracts.
Okay, Peter is asking, how are they able to magically wipe away that debt?
So they do this through the legal process because the creditors are not abiding by the Fair Credit Practices Act. They're not abiding by the communication guidelines that are required within those things. And so many times they're able to show them they don't have the right paperwork involved in the transfer of that debt from banks to credit card collection companies and things like that. And there's different legalities with regard to that process as a whole. In addition to that, there's other things where if they are not abiding by the law, then they can threaten lawsuit and get that debt wiped off and things like that. So they utilize the legal process, but there's 100 ways to potentially reduce or get rid of that debt, in the first place. So they're actually in the process of developing AI right now as well to be able to look at all of those specific aspects and fight each creditor the way they fought them in the past as well, and have that kind of data put together for them. So it's exciting time for this industry.
Okay. Let's see here. Fang Wang is asking, does the fund get to be rolled over to more debts? It sounds like it could be an ongoing investment. I assume she means after the 3-year mark.
So I don't believe that they'll need our funds at the end of that time because of the amount of debts they're having and the amount of profitability they're having on the back end of this. So if you look at that, they should be able to self-fund their investments with the cash flow after paying back all investors within 2 to 3 years of this investment, fully without even buying all the new contracts they want with their own capital and their own profits. So that's what it looks like to me based on the financial modeling I put together on this and discussions with them about the costs of everything as well, and kind of going over their financials with them and things like that. So,
okay, Prolette is asking, how is it reported? K1 or 1099?
If you're investing into a fund or shares of an LLC, it would be a K1 in that case.
Okay. And then Paul is asking, is there a historical return record available? How close to 20% is the actual return? And I know you've made Fund One's return performance available to me. Is that something you can do for everyone, I assume?
Yeah, that's not a problem. We can absolutely show that and show what that's doing. Where we paid off, about around 3.2 million now of the $5 million total in Fund One. Investors are getting their full preferred return and all that stuff as they get paid off on that fund. And then I also invested my own capital first and saw that through that process as well with regard to the return. So.
Okay. Ashish is asking, your slides mention this is an equity instrument versus debt. In the state and states this reduces the risk to the investor. My experience is the opposite. Can you help explain why equity is safer?
So all I'm saying in this case is that we are not leveraging on top of the investors. In the lending space, when you have pools of loans, there's banks available that will finance a percentage of that loan and investors go into second position. In this case, we're using all investor equity on this versus the having the risk of debt and putting investors in second position. They are first position on these receivables with regard to the LLC. That's all I'm saying in that case.
Okay, so you're not taking out credit loans or debt loans based on the amount raised in the fund.
Exactly.
Okay. Let's see here. William McZeek is asking, what is the average length of time a borrower pays off debt, and what is the interest rate you are charging?
So that's what's great is there is no interest. It's a set payment. So if they have a $6,000 receivable, and they're paying that off over 24 months with no interest. And so that's what's great about it. So you're taking them from, $1,000 minimum payment on, $20,000-$30,000 credit card debt with 20% plus interest to no interest with, a payable of $6,000 fully paid off over 24 months.
Okay. And let's see, I just lost it here. Where did it go? Prolette wants to know, is this being reported as active income or passive income, business income or rental, as the K1 would say?
So it would be ordinary income, but it would be passive for the LP members. So passive ordinary income, meaning you can take depreciation deductions against it in that way. So normally it would be interest income, but interest income is portfolio income, and you can't take depreciation deductions against that. So it would be box one, business income.
Colin G is mentioning here that they fight the creditor as if the creditor was a bad guy. Now we become the creditors for fighting the original creditors.
So I understand the hypocrisy there. What's funny though is that when you look at the whole system, right? The big banks, the big collection companies are buying these things for 2 cents on the dollar and collecting 5 and making a killing. And they're going after people like crazy. And that's why they put the Fair Credit Practices Act in place. If you look at the, I'll say, predatory nature of the credit card environment, I mean, I don't know about you guys, but I've signed up for a lot of credit cards for free t-shirts in college before I had any financial education. And so that's just one small example about how bad the credit card industry preys on, I'll say, financial people that are not financially educated about, the perils associated with it. So on one side, I understand where you're coming from. On the other side too, a lot of credit card debt is because of major issues that occurred, like hospitals that, or medical debt and that kind of stuff that occurred for people, or major distress that happened for a period of time in their life, So I understand where you're coming from, but
it's follow-up from COVID too, because that $609 check, that didn't really do much for families.
Yeah, it's true.
All right, I think I have got all the questions here. If I missed your question, please just put it in again really quickly so I make note of it. I'm going through all the comments that are here. Oh, Stav has a question here. Can the gains from this fund be deducted as losses against other passive investment funds?
So yes. So can gains from this fund be deducted against? Well, the gains wouldn't be deducted, but I get what you're saying. So if you have a real estate fund that is basically a you're getting cost segregation deductions or depreciation deductions against, and then you have this investment that is ordinary income, you can take those cost segregation deductions against this income over here as a passive LP member, because you have passive ordinary income coming in. So I think that's what you mean by the losses.
Yeah. And you're the CPA and I'm not, but that's generally true of syndications or any investment that creates, deductible depreciation. You can offset your other investments that are also passive. You can offset business income that is also passive. It's the same category of deductions.
Right.
All right. Fang Wang says, I'm a bit confused that this model was in existence for a couple of years and now it's coming to an end after this raise.
So the reason why is because if you do the math on this and you're looking at, on average on a $5 million raise, you're talking about $20 million worth of assets being created, $16 million collectible on these accounts. And you're looking at the profits on the back end there. In addition to that, it's creating $833,000 a month with the monthly payments versus $83,000 a month of payments going out to investors. And so that difference can be reinvested in more contracts, and it starts to snowball the cash flow to where the cash flow creates the opportunity for them to rebuy or pay for all the marketing costs themselves. And so it starts to snowball up to that level to where at the end of 3 years, they're just going to be able to self-fund their own contracts at that period of time. So,
all right. Mohammed is asking, if it's a 0% loan, how does such an investment make money?
So the cost of the services are much less, right, than the $6,000 average receivable. So that's where the profits are coming in. Is the cost of the services don't take that much of the money up. We have a cost of acquisition of $1,500, and then the legal fees and the attorney's aspect of this. You're talking about $50 a month out of the $300 a month of payments going back to the attorneys for their portion of the legal fees. The rest of the work is done by resolution processing on the back end. So they do like 90% of the work, and now the attorneys do the rest. So,
maybe it would be helpful to have just a simplified spreadsheet model of contracts coming in.
Let me explain this. So really quick, this is like the Mohammed, this is a great question. When people understand how the banks actually work, this is really fascinating. So $50 million is our fund, is going and buying $200 million of debt, right? That's what allows us and gives us the freedom to now not to take off the interest payment and bring it down to a flat amount that they owe. So you can see the spread between what we paid and how much is actually owed. And if you take $200 million, right, and you collect 80% of it, that's $160 million, right? Now let's just look from the other side. So $50 million is coming in from investors. We're paying them at 20%. So at the end of the 3 years, 50 million plus to 20% is $80 million that gets paid back to our investors. So 160 million that's collected minus the 80 million that goes back to our investors, that 80 million still, that's what allows us to pay our staff, the attorneys, like all the other things, inside of that. That's how the banking system works. And we could have that whole conversation about how loans are created literally out of thin air and all of that. But I hope that makes sense. Like, how it's 0%, but because we're buying it for pennies on the dollar, that's where the spread is made. And that's how we can pay our investors so well. Does that make sense, Mohammed?
Do you guys happen to have a simplified spreadsheet? I know a lot of people in our community are engineers, and that would probably be helpful just in general to
absolutely. So I can provide that for sure. So that's not a problem.
Okay.
Yeah.
Okay. Fang Wang asks, what are the risks in investing?
So one, in my eyes, one of the risks is, hey, we have, if we're at 25% of the value and we have a historic collection ratio of 80%, and all of a sudden, something happens in the economy, a black swan event or something, and they can't collect, and we have a 75% default rate on that debt, that we haven't seen, because we're seeing the historical, 80% collection ratio. But if that occurs, we are, potentially break even. Or if that goes below that threshold, then we could potentially lose money in that deal, right? The other aspect is if resolution processing doesn't pay us on those accounts, then we would have to take over those receivables and collect those receivables ourselves on those specific accounts as well. So that in itself are the two primary risks associated with any investment that I'm seeing associated with this, as far as like, what could happen or what could potentially go bad, right? So.
You're muted, Daniel.
I think Daniel's muted.
Yeah.
I'm sorry, I'm on mute. Okay. One of the last questions here, what's the distribution and return payout cadence?
So it happens on a quarterly basis. So the first payment gets prorated. So like if you were to invest today, the return would start 10 days from now and start to be accrued through the first quarter, the calendar quarter. And then that accrual plus the next quarter gets paid out at the end of the quarter. So it'll get paid out at the end of the second quarter. So you get the first full quarter along with the accrual is when you get your first payment. And then it happens every quarter after that.
Okay. Ashish is asking, how are you limiting program participants to first responders? Where do you get that data?
So we are not limiting it to first responders, but what we're doing is we're actually going out and trying to focus on that group, and we set up discount programs for that specific group. And we're going out. I have a very large military relationship base myself. My dad was a ranger and a sniper in Vietnam, and I work with a lot of Marines from Camp Pendleton. And there's like hundreds of people in that database where they're doing live events right now and helping people with that specifically, where we have QR codes. We go market for this process as well, and they're tracking it on the back end to be able to help with that discount program as well for resolution processing. So that's how we're structuring this for the first responders and trying to focus on them.
All right. Mike Leon is asking, the minimum investment is $25K. Is that correct? And I'll answer from the Alternative Investing Club Fund. If you go through the fund, that is the minimum investment. If you go directly to OCG Properties, they have a $50,000 minimum investment. Do you guys want to add anything to that?
Yeah, we just want to direct everybody to go through you. That's really going to be the simplest way to do this.
Is there a funding deadline? Good question.
So there is not a funding deadline, except we are working with multiple RIAs and investment advisors. And if they start coming in bigger numbers, which we are seeing some major progress with, then the fund may not be available anymore. We may be able to have all the funding we need for this. So I would highly recommend sooner than later because of those potential issues.
All right. And Feng Wang is asking, so would that make the first distribution in July?
Yes, correct.
See a CPA answer this.
Correct. Yep. It would be like July 1st would be the expectation, right after the quarter.
All right. William is, I'm not sure I actually understand this question, William. Is it just credit card departments that can be added?
So no, there's also other medical debt or personal loan debt and things like that they invalidate. The vast majority is the credit card debt though, but they do have those other accounts.
Okay. Well, it seems like we have a lot of strong opinions in the chat on this, and it's a brand new type of investing for our group. And so I will say, I hope you've all been getting the educational emails that I've been sending out. I've been sending them to the entire group. And if you have any questions, feel free to ask us. One of the reasons why I like this is because you're going out and you're helping people that are in debt, and you're restructuring their debt, invalidating a lot of it, and you're getting them onto a path to being out of debt. And particularly in a nation where medical debt is the #1 cause of bankruptcy for families in this country. I love it when good investment comes together with opportunity to be helpful. I named my company Good Samaritan Capital because I wanted to keep that in mind. And so I like that this is not just a property where we're improving, the property, which is good, but we're actually going out and changing lives with this.
Yep.
And so I do hear that there's a lot of feedback on debt resolution, and so I'm going to be following up more with that and answering questions on that as well. And I know Matt said that he can put together a like a simplified, a spreadsheet that shows how, when the contract's coming in, how the money flows, and how debts become invalidated in order to create an investor return. Is there anything I missed between you two that you'd like to say before we close it out?
Yeah, I love what you're doing, and this is really amazing. Bringing education again. This is the whole financial literacy, bringing it to all these people inside of Intel, and then outside beyond that. I think it's brilliant. Yeah.
All right. Well, thank you so much, everybody, for coming in here. Next week, we have actually another novel way of investing, and that is investing in airplanes and engines. And so we're going to be hearing about that next week. If you're interested in the Club Fund speakers today and participating with the Club Fund, just go to the form that's up on the screen right now, alternativeinvestingclub.com/fund. There's no obligation there. This is just so we can follow up with you. You don't even have to put in what you're thinking of investing in this particular fund. We're just going to follow up with you and make sure that you have all your questions answered and loop in whoever we need to. And so thank you very much. And feel free to send me feedback. I always love feedback. If you've got hot opinions, one way or another, I love to get those. And I love to get your feedback on how this club can be better. So if there's some way that you think I could be better or the club could be better, please let me know. Or if you want to send encouragement, I think I've told you all, I keep all the encouraging notes that you send to me in a Word file. And if I ever feel like I'm being beat up on a particular day, I go read it. So I appreciate those as well. So thank you very much. And we will see you all next week, Friday at noon, the Alternative Investing Club. Since we can't take ourselves off mute and thank the speakers, put it in the chat.
Thank you, Daniel, for having us. This is really exciting. We're looking forward to having you all join us.
Thank you, Katherine. Thank you, Matthew. All right. Oh, Keisha says that she would love to connect with you, Katherine.
I'm all over social media. You can actually go, go talk to my AI clone. If you go to katherinebell.ai, you can have a conversation with my clone. This is crazy amazing. We're going to create one for Daniel. So yes, and my contact information is in my clone as well, but I'm all over social media as well. My company's Titan Impact Group. And I got my books. So this is my
put it down a little bit. We can't see the title. There we go.
This one's Wealth Wise Women. And I have 3 international best-selling author books. I'm actually writing 4 more this weekend, which is crazy. So it's we'll be able to get connected to all this as well.
Hey, Keisha, just look her up on LinkedIn. She's active on LinkedIn. You'll find her. All right. Love you all. Have a great weekend. Happy Valentine's Day.
Oh, yes. Happy Valentine's Day.
Happy Valentine's Day. Cheers.
Awesome. Thank you.